GM fam, we're back with the morning double shot. We've got evmknows as well as 0xalunara, two of the most esteemed brains within the Curve ecosystem, to talk about the big news that's been trickling out over the past 24 hours about the BIS and a consortium of banks potentially using Curve's V2 algorithm for their settlement technology. Knows, why don't you take a second to introduce yourself?
Well, I'm Nose. So probably a few of the listeners may already know me. I'm very active in the convex and curve community. I'm also part of the Lamarisk um, sub-DAO of Curve. We are making like regular reports on different stablecoin pools or derivatives, be it Bitcoin derivatives, Ethereum derivatives, and we try to assess like all sorts of various risks, and we try to protect the liquidity providers from essentially making bad decisions, not making bad decisions. Um, and we try to assess the risk also for the DAO, because all of these pools that we assess, they usually go through a application process at the Curve DAO where one or more projects apply for Curve incentives. And so I would say this is the DeFi part, and maybe a little bit. Um, Another background of me is TradFi. So in 2021, I uh, I quit TradFi to go full time into DeFi. And before that, I was working in a big in a bigger bulge bracket bank in the area of payments, which is the reason I'm so fascinated about TradFi payments technology still to date. At that time, and I would say even still, it's not as exciting as DeFi and blockchains, but I'm still following along. Yeah,
So
so
this would
that's
make you uniquely
yeah,
qualified to talk about this sort of intersection of DeFi and TradFi going on right now.
yeah, a little bit. I would say I'm humble in that sense, but I'll try my best.
And Alu, in case anyone missed the previous stream, could you give us a brief background about yourself and where you fit into the Curve ecosystem?
Yes, I am a HTML programmer and I built Curve dashboards which provide information about bribes for Convex. And as a side gig, I also run the Union, which is a socialist experiment about congregating bribes to people.
Excellent. Excellent. So let's dive into it. evmknows. How did you first hear about this? Is this just that you've been following Project Mariana closely? We're like refreshing the site every 5 minutes, waiting for the report. Like, how did this come on your
Yes.
radar?
So I've actually seen there was a publication last year, I think, about Project Mariana being like announced, and in the announcement publication there was a graph that showed a multilateral pool that consists out of three assets, and they were mentioning that they were looking into um, deploying such a pool on chain, and to test this technology. And when I saw the graph, I um, was already thinking that there's only one DEX that provides multilateral pools, like pools with more than two assets, which is Curve. And at that point in time, I knew they will probably or might use the Curve AMMs, and hence I've been following along. But there haven't really been much announcements about that. And when I was on LinkedIn yesterday, I was also following the some people from the Bank of International Settlements. I've seen the interim report, which was released, I don't know, 30 minutes on a LinkedIn timeline, and just decided to summarize the findings about it. Um, for the crypto Twitter space, because it's there probably have been other developments between TradFi and DeFi, but I think I would count this as more of the bigger ones, because essentially the previous experiments were involving private blockchains like a3 Corda, I think it's called, and Stellar, but it hasn't really been as exciting as this announcement, because now this is an experiment that involves like the use of advanced smart contracts, which is which is maybe the first of its kind for now, which is why I think it's so exciting in that sense.
It's amazing to also see that LinkedIn scooped crypto Twitter on this one. Can you
Yeah,
talk?
yeah.
Oh, go ahead.
No, you go.
I'm curious to hear, from the TradFi perspective, can you talk a bit about the size of the market that is being attacked here? So this is the international settlements market, right?
Yeah. So I must admit I'm not familiar with the actual size, but actually I've if I were to elaborate on what Project Mariana is about, like we first have to make a step back and understand the issues that exist in TradFi first before we get into what Project Mariana was trying to solve. And I think for that a good example is a cross-border payment. So let's say you are a customer of a German bank, and now you're in Turkey, in Istanbul, and you want to pay some merchant for a pair of shoes or whatever. Now, like you put your credit card on the point of sale terminal, and then you wait a little bit, but there's a lot of stuff happening in the background. And the merchant wants to be paid in Turkish lira, but you have euros on your bank account. So when you hold your credit card against this POS terminal, the the credit card provider communicates with your bank and basically tells them to now route the transaction towards the merchant, towards the bank account of the merchant. But what is usually the case if you are abroad as a foreigner, the merchant bank doesn't necessarily have a central bank account in the European space. So the transaction has to go through a correspondence bank, which might be a bigger Turkish bank. And now I notice we have to make even one step back before that. So maybe you're familiar with the IBAN, so the international banking account number. So there, one part of the number is your personal account number, and then there's the bank account number. And the bank account number is the account number of your bank at the central bank. And interestingly, many people say that yeah, I have money in the bank, but actually you don't have any money. You have just a claim on your bank. But there's only two forms in which money can exist. One form is cash, like physical cash, and the other one is in central bank reserves. And yeah, so when you send money from bank A to B, the settlement happens between the central bank accounts of the commercial banks. Just as an excursus to understand those dynamics, and then so yeah, you paid for the pair of shoes. Now what's happening is the transaction isn't settled immediate. It's usually batched with lots of other transactions and then cleared within a period of 2 hours, and that happens I don't know 3 to 8 times a day, depending on the day. On a Friday, it's a little bit more, but usually they are batched and then settled between the central bank accounts of in this case the correspondence bank, which sits in between the merchant bank, the bank account of the merchant, and your bank account. So then in this time frame between where the German bank transfers the money to the bank account, the central bank account of the correspondence bank, there's a counterparty credit risk that the correspondence bank takes, which sometimes, I'm not familiar with that process exactly, but they hedge against the counterparty credit risk of the German bank, and this incurs costs. Then you have the foreign exchange risk. In that 1 hour time frame, the exchange rate between the lira and the euro could also change. So they hedge against this risk as well. And again, this incurs costs. Then the money is settled between the central bank account of your German bank and the central bank account of the correspondence bank. Then the correspondence bank dumps the euro for the Turkish lira. And then it sends the Turkish lira to the merchant's bank account, and in between like this time frame, there's also a counterparty credit risk that the merchant bank account takes, and they hedge against this risk as well, which again incurs costs, and all of those costs add up, in which is partly the reason why foreign, like if you are like in a foreign country and you pay with a credit card, it's you get a shitty exchange rate when you see it on your bank account statement. And yeah, now we are getting into Project Mariana.
So actually, no,
yeah, okay.
before we get into
okay.
Project Mariana, can I
Yeah.
just summarize everything you said so we
Okay,
can
okay.
make sure we're all on the same page? So
Yeah.
it sounds like the way the system works today is like I go into a store and I pay with my credit card. And like from the user perspective, transaction over, I get my thing, my money is out, like good to go. But like what's actually happening in the background is, okay, first, like MasterCard is the one facilitating all this, but first, like my bank account is like money goes from my bank account to basically in order for my money to go from my bank account to the merchant, it needs to go through this ladder of like correspondent and intermediate banks so that you can get up to the international level, get to this settlement layer, and then bridge back down so the money gets where it needs to go. And what you're saying is not only is that very complicated and time intensive, but because of all of the duration, counterparty, FX exposure you have to take through this process, and therefore the hedges you need to take, it gets incredibly expensive. And so like that's the problem and the situation we have today. Is that right?
Yeah, that's correct. I also must say, like maybe it was a little bit of a complex explanation. In reality, it's even more complex. But yeah, you're correct.
Man, you explained it super well. It's just a really complicated process, and I want to make sure that we all understand it before we move on. So, can you please explain to us Project Marinara and Meatball, please?
So, yeah, well, in the case of Project Mariana, you have those central bank reserves being tokenized on chain. So you have them as tokens on, let's say, on mainnet, and the commercial banks are able to provide liquidity for one or multiple of those tokenized central bank reserves. They can deposit into the pool, and then, like if we again pull out the example that I've mentioned, where you pay with your credit card, the process gets simplified, and the process is also more or less being carried out atomically. So my German bank account would route the transaction not through those traditional finance systems, but instead would swap through the pool this wrapped Euro CBD, not wrapped. It's wrapped central banks reserves, but the W, it's a bit confusing for us DeFi natives, but the W means wholesale CBDC, which is like those central bank reserves of the banks. So my German bank would dump this Euro wholesale CBDC token through the pool, get the Turkish lira wrapped CBDC tokens, which would then be transferred to the on-chain account of the merchant's bank, and they would then redeem either directly at the Turkish central bank the wholesale CBDC tokens, or they might use like the process. Sorry,
they might just hold them.
Yeah, they might just hold them. Yeah.
Yeah.
So it's there's, and this is also interesting if user DeFi native read the system. You might ask yourself why there are bridges between the like TradFi system and the on-chain architecture, but they're so complex. The central banks, like you cannot really expect them to issue central banks reserve natively on-chain. And in this case, it was just an experiment. So they, in that sense, they first have to build bridges, and then at some point in the future, they might issue those central bank reserves natively, so that you don't need bridges. But for now, you need them. and which is why they are separated in the architecture you see in the interim paper.
Yeah. Okay. So again, let me summarize and tell me if we got this right. So what this test was like, what we were trying to do is, instead of having this super complicated process where we have two individuals and that are international, in order to transfer, we have to do this process of laddering up to the international level where settlement happens, letting them do the banks and then letting it ladder down. What this new system does is say, the central banks are going to issue reserves and put them in curve pools directly, so that like when people need to get these reserves so they can swap, instead of having to go through all these intermediate steps, they can just access the reserves directly through a curve pool. And that like this like 30-step process, which requires a ton of hedging and counterparty risk, gets collapsed down to like basically one swap into a foreign currency reserve,
Exactly.
a swap into your new foreign currency reserve, and then a swap out of like into real fiat. Is that correct?
This was perfectly correct, except for one point. The liquidity providers in the Project Mariana setup are not the central banks, but it's commercial banks. So they have their central bank reserves, which they then tokenize and then put into the pool. So they they are the liquidity providers in that case.
Perfect. So, okay, without getting into like the real details of how the system works, because it's not worth anyone's time, but like when I hear this construction, like it makes me think a lot about how the American Treasury market works, and how there's like prime dealers, and how like essentially the government works in like very close partnership with these private entities to express these like financial instruments into the market. And so, is there how many parallels do you see with this new Bank of International Settlements construction and the relationship between central banks and private banks? Do you find this to be like a new construction, or do you find it just to be like kind of like a new feature on like how the way the world already works?
I
Basically,
would say it's for the end consumers, and also this is maybe more of a general statement, but I think in like 10 years down the road, the end consumers won't even notice what happens in the background, or what has changed in the background. So for them, what they might observe is just cheaper cross-border transactions. So you're not paying 1.5% extra when you pay something abroad, but it's being brought down to 0.2%, maybe even less. And so in that sense, I would see it not as a new future like it's not a new primitive. It's maybe a new primitive in the sense of technology, but not in the sense of delivering the value. If you know what I mean.
Yes. Yeah, that makes a lot of sense.
Can I ask something about Knows, when you say that the central banks tokenize it and give it to the commercial banks? Like, they tokenize it as what? Like, are they creating the official first CBDC, or they are tokenizing it as a token that we know? Like, what exactly does it mean that they tokenize it?
Okay, so the central bank accounts, you can imagine them as a normal bank account that you're already familiar with. So if you log into your online banking, you see there's numbers, and there's an account number, and to that account number, this much euros are mapped to. And so when I'm saying tokenized in the sense that let's say a bank had 100 million euros as like central bank reserves, they can then like you could say, I want to tokenize 10 million, so 10 million gets deducted from the central bank reserves account of the bank, and then they get 10 million in wholesale CBDC tokens on chain. So in fact, nothing changed on their balance sheet. It's just what is different is that 90 million sits in this classical TradFi system, and 10 million is on chain. But essentially, you still have 100 million in central bank reserves.
What I mean is, this is on chain as a new CBDC, not as a token that we know now, for example.
No, it's an ERC20 like ERC20 token. So nothing.
Yeah, ERC20 token. But for example, like they're not choosing USDC or whatever. They're gonna put like the new dollar that they issue. Correct?
Yeah. It's their own ERC20 contract. Yes.
Yeah, but
It's
to be
not,
clear, like there's a tangible difference between like bank reserves and currency. And so just by like tokenizing bank reserves and putting them out there, that's not the same as issuing
Absolutely, yes.
CBDC.
Yes, that's true.
Can you maybe expand on that?
Well, like for example, like what a bank reserve is an asset in a bank. That could be cash, that could be money, that could be treasuries. Like your bank reserves could be real estate, you know? And so like when you tokenize bank reserves and you put it on chain, what you're essentially saying is like, let's say you tokenize it $100 million of bank reserves, and then you put 100 million of these tokens out there. What you're saying is that represents the value in the bank, but that doesn't necessarily mean like if you take one token, that equals $1.
But if you divide something into like so, for example, what kind of other tokens can they do? Like, why wouldn't they do it as if they do it in like in dollars? Why wouldn't they tokenize it as dollars? If you know what I mean?
Well, because they're not trying to create a currency. Like they're trying to create this like token pool for this very specific like construction of international settlement. And so like you could easily like a way to create a CBDC is to tokenize bank reserves and then put them out there and then tell people that if you take your tokenized bank reserves and send it to us, we'll burn it and give you $1. Like, and then like now we're starting to get into a big question of like, well, what even is a currency? Is ETH a currency? Like, is Bitcoin a currency? And like, you know, so like we're getting like pedantic here. The only thing that's important to know is that like this construction is not about like issuing a CBDC and like creating a currency for people to use on chain. It's about creating liquidity pools that are backed by like, you know, pillars of the financial economy. So yeah, I don't know. I mean, we're just like lost in the words now.
There's one thing maybe like where it makes sense to elaborate. So usually like banks are allowed to leverage. So if they have 100 million in reserves, they are allowed to have like a billion in deposits. So you don't need to. So the actual money is only sitting in central bank accounts and is available in the form of cash. So a bank could have 1 million in deposits but only 100,000 in central bank reserve. So and if you look at Circle, for example, I mean, God, maybe that's a bad comparison because UCC is also backed by like treasury bills and sorts of like all other multiple different assets. But like let's say you are maybe a good example is you create a bank. You could have 100,000 in central bank reserves, but then you have 1 million in deposits, and those deposits you could tokenize them. But if everybody would try to transfer them, for example, to a different bank, there's not enough like liquidity in the central bank reserves to be able to meet the redemption demands of the 1 million in tokens or deposits. So there's definitely a difference in a way, like what USDC or USDT are. I mean, USDC is pretty transparent, but yeah. So this is there's a distinction.
Just to drive this home particularly, right? Like you could have the uranium bank and they don't hold one single dollar. All they do is hold uranium, but that has like a value, right? And you could say like, okay, there's $100 million of uranium and we're going to issue uranium backed tokens and they're going to be on chain and people can do stuff with them. But like that doesn't make it money, you know?
Exactly.
D-Advisor, you're on mute.
I'm sorry, I'm just saying, if I understand you correctly, the fact it's like an asset, the fact that it's worth something doesn't mean it's actual money.
Yeah.
Yes.
And then you can get like super out there and have a conversation about like, well, what is money? And like, maybe just because it has value, it is money. And but like, point is that from like the label of CBDC, which we think of like the government putting money on chain for people or businesses to use, like this is much more like, okay, we're creating a specific asset for international settlement, and like that's what it is. Cool. So, man, we definitely got stuck down that rabbit hole, but so knows that where that started was, or I guess where that rabbit hole started was I just summarized up like what the project, wait, what is it? The Mariana, wait,
Mariana.
Mariana,
Yeah.
Mariana is basically using crypto to replace the like the tiering up you need to do in order to do international settlements. Is there any other piece of the construction that we haven't talked about or just need to clarify?
Yeah, so I mean, for now it was just an interim report laying out the details. There will be another report being released this year with a lot more details. But there's there's no more details actually. So there's a disclaimer also in the Bank of International Settlements paper that says that it's not an endorsement of like the actual protocol. And what might happen is that, like, I've seen a few people speculating on Twitter if this what does this mean for Curve? I would say no, like nobody knows what this actually means, but you can imagine that maybe they fork off the contracts and remove the fee. So. But then you have the issue of copyright. As far as I know, the AMM contracts are under the copyright of I think it was Swiss stake legal entity in Switzerland. So maybe this will mean something for the DAO, maybe not. Maybe they will implement their own contracts and change it up a little bit. We can only speculate for now what this could mean.
Yeah.
But it's certainly a validation for the like for Curve, in the sense that they might wanted to use a solution that maybe did not involve active liquidity provision, because like Curve V2 is a very good passive product that banks can like plug into their existing systems easily.
Yeah.
And this is the way I would look at it.
Yeah, the way I like to think about it is like in science, there's theory and experiment, and about half the breakthroughs come from like experimenting. If Mitch hadn't launched Try Crypto a few years ago on chain and kind of worked out all the bugs and shown that this can work in tremendous fashion with incredibly volatile assets, then there probably wouldn't have been the experimental evidence to convince the BIS and other banks that this algorithm is actually robust and unique and, in my opinion, like Nobel Prize worthy.
No, that's Nobel Prize is centralized. We don't give a shit about them. No, but Garrett, I think you're, first of all, there's this book called like, I forget. It's the book we're supposed to be reading, Garrett, but it's essentially like the whole concept is that like like human innovation comes out of play and comes out of just like experiments, and like we do stuff and like we don't really understand why we're doing it. We just like create capabilities, and then someone comes along later and realizes like, oh, if you take this thing from Mitch and you take this thing from what MasterCard built and you put them all together, you get magic. And like I just think that whatever happens here, whether the Bank of International Settlements like actually enters the curve wars and buys a bunch of convex and starts bribing, or even if like on the other side of the spectrum, like not only is this like a fork on a private chain that doesn't touch Ethereum, but like even worse, they screw Mitch out of like the copyright and they just take all his stuff and nobody gets any money. Like at the end of the day, we need to remember we're here for two reasons. One are the ideological things around decentralization and anti-government or like whatever. But the other is the technology. like the actual capabilities that are provided by what we're doing. And say what you will about the politics, everything else, but like what this story is the Bank of International Settlements realizing like, oh, the system we have is like shitty and doesn't work and like is bad. And there's like better options out there. And so that's what I see.
And the book is The Dawn of Everything, A New History of Humanity by David Graeber and David Wengrow for people who like reading.
Yeah, I knew there was Don in there, but yeah, it's I think this is like incredibly bullish for like the most important thing, which is like on top of under the community, under the narratives, under the money, is there something real here? And like the people who don't have a stake are saying like,
yeah, exactly. It's like, I mean, for years we've had to hear people say like, there's no real innovation in DeFi. It's just people putting TradFi concepts on chain. But here we have a concept that doesn't exist in TradFi. There's nothing like this like passive LP AMM. So of course, when the big brains at the BIS, because there are very big brains that are studying this, they look at it and they say, yeah, this is something we've never seen before. Like this is going to massively reduce costs. It's a no-brainer.
Yeah. And we just went through like kind of the credit card route on this, but I've told this story on stream before, but it's really relevant right now. So I'll say it again. I used to work in like the treasury department of Anheuser-Busch, and like we would regularly do multi-billion-dollar wires. And so like if you do a multi-billion-dollar wire, you want to know what happens? First of all, your boss and the CFO pulls up a chair and sits right behind you and stares over your shoulder until the wire clears. But what happens is like for that amount of money, it takes like somewhere between like 4 and 8 hours. You start the transaction and like every 10 minutes, the CFO will say, Rex, where is it? Where's the money? And you call the bank and what they say is, I don't know what to fucking tell you. It's with like the correspondence banks. Like there's no way for us to tell you when it's going to settle. Like it's going to happen. Like get off my back. And like, you know, you can probably do better than that. Like we were running a very specific type of ship at Anheuser-Busch, but the point is that like the systems we have today are so much jankier than anyone who's not like directly working with them realizes. And like one of the biggest reasons I'm bullish in crypto is like forget the freedom and forget the censorship resistance and like all that stuff. It's just better.
True. But like you say, it's better. But us as like normal people, we don't want like. It's about how it improves our own life, like our small lives. You know what I mean? And that's the fact that it's better. And I think it's quite a long process that is going to create all kinds of ups and downs in the way. But I think that. I don't know. This is the most bullish, in my mind, the most bullish story about DeFi in a very long while. To have like these are the most serious entities that can look at crypto. No, like is there any other entity that is more serious about money than the BIS that can start exploring this kind of stuff and trying with them? Like I don't know. Does it get any better than that?
JP Morgan. And
I think JP Morgan is bigger than the BIS.
JP Morgan is finance, and they've got like everyone who matters is playing in this game. And I just like you got to remember that when you're reading about Gary Gensler.
Also, the Bank of International Settlements, I believe, is based in Switzerland. I might be wrong about that. And the Swiss law on cryptos and the regulatory, like the ability to come to regulatory compliance in Switzerland is much easier than the United States. So it's like not out of the question that even if they don't do this like on curve, like that they can feel in like that they can build on chain and actually experiment on chain, because we've seen some banks do this like on test nets.
Yeah, and again, like JP Morgan today has a consortium of banks that are running billions of dollars of repo transactions on their Onyx blockchain, which is literally just a private version of Ethereum. And, you know, like maybe there's a world in which like there's two separate worlds, the private and the public and like whatever. But if like I really believe that Ethereum is just the better solution, and it's inevitable that all these private chains will remain permission, but will still settle to Ethereum. And like, that's the world that we're building. And I think I'm like, please, JP Morgan, Bank of International Settlements, everyone just come.
Yeah. By the way, there's a you mentioned something good. There's another perspective if you look at it. So if we are talking about cross-border transactions that maybe go like from Europe to, I don't know, Saudi Arabia, China, Hong Kong, and whatnot. So it there's this point of resilience. So you could certainly use private blockchains offered by a centralized or maybe a few centralized entities that are located in one geographical area. But if you were to estimate or assess the resilience of using this private blockchain, you would quickly come to the conclusion that it's not fit for for those international settlements, because anything could happen in one geographical area, and you wouldn't want your, I don't know, central bank reserves being not being settled because you had outages in I don't know, one or more cloud providers that are like those private banks are using for the infrastructure of the private blockchain. And then one of the last options, or the single best option is Ethereum, which has proven its resilience over multiple years now. And then even if they don't use like Curve, and even if the Curve DAO doesn't really directly benefit from it, there's this increasing demand for block space, which results in increasing demand for Ethereum, which then results in Ethereum rising in value, which then results in, because Curve is mainly traded against ETH, resulting in all other DeFi coins also rising in value. And this is a good different perspective, that is bullish in any case for our entire ecosystem.
And you can imagine they're not going to release a factory. So once people get used to trading on Curve V2 pools through and know that it's trusted for handling multi-billions or trillions of dollars, they might be comfortable launching their own Curve V2 pool because they see an easy factory there.
Yeah, and sorry, just to go back to what Knows was saying, this isn't only about resilience to like server outages. To be clear, like especially if you're Russian, Afghani, Iranian, Venezuelan, like it's also like we have entered a much more like volatile world in which like geopolitics are reaching directly into like foreign currency reserves and bank accounts and stuff. And so like part of why I like really believe that Ethereum is inevitable is not only does it provide these routes around technology failure, but it provides like the ability for humans to like live and thrive and like survive in a world that where bank reserves are just being swiped from countries left and right. Like, it's wild.
Yeah, in that sense, it's also geopolitically a better option to have a neutral ground for like our monetary system, financial system.
But the current system, it already works, and countries are exchanging currencies, and transactions are being settled. How neutral is that at the moment? Is that the Swifting?
Well, there's basically like there's two systems. There's like the Western system and then the everything else system. Yeah. And the Western system is essentially like the four guys in the Treasury, Fed, in the White House decide like if you're allowed to be in here or not. And then the other system is like how much muscle and money do you have to operate in the shadows?
Yeah, because I'm trying to come up with a worst case scenario. So let's say that if they use Ethereum and they're going to use maybe Curve, maybe Uniswap, maybe Balancer, who the hell knows, they're going to issue their wrap digital currency. They'll still want to have the option for blacklists and disable trading. So even if it is on Ethereum and even if it is on a public mainnet, they'll probably still have the ability to block entire countries trading their tokens if they want to, I think.
Yeah. I mean, I think that the magic of Ethereum is it provides every single one of us a rage quit option, like from our like financial systems, from our societies, from like whatever's happening. Like it gives us the ability to say like, I'm not okay with this. I'm taking my ball and going elsewhere. And so I think you're right, Alinar, to just like thinking about worst case scenarios and like on a country by country or jurisdiction by jurisdiction basis, like we're all at risk. But like the magic of crypto, like I say this to my friends all the time, is I think that there's, I'll call it a 20% chance that in America, full on crypto becomes illegal. Like if you own it, you're screwed. Like I believe that's possible. And like my response, see you guys in Dubai, because like 10 years after that, America will undo that like horrible hobbling and like try to catch up. And yeah, I believe that, I think we all believe that like crypto is like a better system that eventually we're all going to figure out. And we're here early today because we hopefully saw the truth before everyone else.
That is true. You can have as much centralization as you want, as long as you have this open, neutral backup, which is just plain Ethereum, which you can exit to, then it's all fine.
Yeah.
I think this is gonna, as the years go by, I think this option of rage quitting into ETH is gonna become more and more like it's gonna prove itself again and again. And I think that a lot of the adoption of like this new way of internet, and like Rex likes to call it the inevitable ETH, like like for me, these past even 2 or 3 years. Okay, like from something that I just know the name of, like Ethereum, and know nothing about, it has officially become like and again, not financial advice, but in many ways, it's the form of money that I trust most. Because just like Rex just said, when I just hold my ETH, I honestly don't feel that at the moment, at least, anyone can touch it. And on any other scenario, there's always someone that can just like press some kind of a button and say, okay, you know what? Whatever asset or money you have there, whatever you call it, you can't move it now. And with ETH, I just don't feel that they can, at least to my knowledge or my ability.
Exactly. Benny and I have we have our income with the union and Curve Monitor, and we have a treasury. And there's a lot of regulatory uncertainty because he's from Australia, I'm from Europe. We have a American entity, and there's a lot of questions about how many taxes do we pay, who are we owed what. But whatever happens, we have our treasury in DeFi native tokens that are unseizable, unfreezable. There's no bank, there's no government who can just yeet or take our funds or freeze them for whatever reason, simply while we are figuring stuff out. So we feel kind of safe that nobody can take it away from us yet. Yeah, sure, they have a branch attack and they can tell us to hand over our keys, but that's an entire different question, an entire different story.
Can I ask like a theoretic questions? Maybe knows, maybe one of the others, whoever. Like, if for example they do this experiment and they do this like huge pools of I don't know, billions of dollars or even trillions of dollars, and they do it in whatever tokenized way that they do fully control, like for example USDC and whatever, with blacklist possibilities and whatever, and they do all of a sudden blacklist it, like what's the scenario there? What actually happens if there's such a huge pool and they decide to blacklist it for whatever reason or whatever, because any kind of suspicious activities or like, how do things go down after that? Like
the Sam Kazemian defense.
No, I'm really asking. No, I'm not manifesting. On the contrary, I'm kind of like who says that they can't they can't blacklist it if it's on a pool? Like who says it?
No, they can.
Yeah, they can. It's also there's you need to understand that the usage of Ethereum and those contracts, token contracts and the pool contracts it's not something that will be available for us DeFi users. So they have their wholesale CBDC tokens on chain, and in order to be able to transfer them and provide liquidity for that, you need to be whitelisted, and in order to get whitelisted, you need to be a bank. And so they are using this technology, but I would say in parallel to us being in DeFi. So we would see their transactions on chain, but we wouldn't know. Like it's just banks using this technology for now. It's not really for a solution for us end users, retail clients. But what could emerge from that is maybe at some point banks will tokenize their deposits and bring them on chain, and then you would, like, if you have this one legal with those central bank reserves being tokenized on chain, you would be able to in real time see how much reserves this bank has that issues their bank deposits on chain. So it's it will develop from then on, and there will be centralization mechanisms. Like I don't believe that like 10 years down the road we won't have that it will be like an anarchy like type of vision financial system, but I think those two worlds will coexist, like this fully permissionless DeFi stablecoins and decentralized stablecoins. But yeah, it's like the benefit will come from the option of having of being able to hold USD in a decentralized and permissionless way, or like DeFi tokens, and being able, like as Elonara said it with the example. But you could also have the option if you don't care about like holding maybe a less liquid stable coin, and you don't care about centralization mechanisms. You're like just an end user that wants to receive your salary, you want to pay for groceries, and that's it, and just continue with your life. You could use that, and you won't even notice that the system behind TradFi changed.
Yeah.
But then you still have the option to use like permissionless stablecoins.
Well,
so
hopefully you're getting less scams when exchanging currencies, but yeah.
Yeah. I mean, I think like there's three reasons we like blockchain, right? Immutable, transparent, permissionless. And I think like the construction that we're talking about is immutable and transparent, but it's not permissionless. But like there's value in those first two. You know, there's so much value in understanding that like, hey, all of these merchant banks are solvent. We can't interact with them directly on chain, but we can see it, you know? And so I think I have no problem with this like centralized construction, because first of all, I just care that people burn ETH. And second of all, I care about like the other properties that are more than like freedom and access. Like there's more to this technology than just like, hey, can I use it or not?
I'm curious to see how transparent it will really be, though.
Yeah, I mean,
say for example, they are going to mint like 1 million CBDC tokens. Like there's going to be audits to ensure that these are all backed, or in the case of fractional reserve, they don't even have to be backed. So it's going to be there's going to have to be regular audits as well, independent audits.
No, I mean, you're definitely right. And I mean, like we're in like the realm of like really what is trust in finance, because like, look, like if JP Morgan literally, like, who now at this point in history has become like part of the organ of the US government and like can basically issue, like they are indestructible based on like how the financial system works. Like if they issue tokens, like I don't care if it's audited or not, like it'll be possible for those to be honored in a way that like something like Tether, who doesn't have access to like the organs of the internal government, like they need to actually be solvent. And so I think as we enter like this BIS conversation and like true like sovereign banks, we're entering like a whole different conversation. But man, like the institutions are coming, you guys. Like this, it's real.
Yeah, this feels like a watershed moment, right? Like this doesn't feel like our classic like reply guy, like such and such random tiny protocol just launched something. This feels like we're onto something big here.
Yeah. And I think it's amazing to see that, you know, they could have made all kinds of experiments on all kinds of places, yet they've chosen Curve. I'm not saying it as financial advice. I'm not saying it as whatever, but they choose to do this experiment on Curve, and I'm sure they have some very good reasons to do that. Because, like you said, there are some very smart people in the BIS and all these places. You don't get there if you're not pretty smart.
Do we actually know why they chose for both Ethereum and Curve? or is it like they just call up Mitch and it's like, yo, how do we use this? I mean, there's got to be somebody had to be doing research to know what to do in the first place, right? How did they end up here?
Mitch was on a BIS panel about a year ago where he did a fantastic job, and V2 was known at that point. But they do mention specifically in the document that for Project Mariana, they were looking for things that had certain properties, one of which was to keep slippage constantly around trading prices really small. So the Curve V2 algorithm is really good at that, as well as to look at algorithms that could limit the profitability of undesirable trading practices like front running, and options to control the cost for liquidity takers through the adjustment of parameters. So, I mean, in theory, you could imagine a universe where they use Uniswap v3, but it just doesn't quite make sense because you need some, Uniswap v3 is some issues around slippage. It can't really process like massive, quick, volatile changes without LPs having to rebalance liquidity actively. They wanted like, on some level, like a commoditized solution. And this is, but yeah, by no means is the algorithm like a commodity at this point. But it is able to like passively handle like massive volatility and fluctuations on chain. It just sits there and like chugs along. We've seen V2 algorithms handle Bitcoin, Ethereum price pumps, price dumps, and it catches up in like real time. So there's something here.
I think it's totally reasonable to think that like Mitch is involved. He was on a panel, he's probably contributing to the research.
They're not inviting him to speak and quoting him if they're also planning on screwing him, right? Like it's much easier to work with him.
Yeah. Also, multilateral pools. Those are like, if you would use Uniswap, we would have, in the case of the Project Mariana example, you would have 2 pools. 3 pools, sorry, and which would lead to like fractured liquidity. So you would have, like, in order to achieve the same, you would need to deposit more in central bank reserves in all of those 3 pools, but you could deposit less and achieve the same efficiency in the swap process if you have it all in one. So
well, you're gonna have fractured liquidity with Curve too, right? You're not gonna have one pool with 20 assets in it. It's just not feasible.
Yeah, sure. But at least 3 or 4, like a 4 pool, maybe with the US dollar. Like this is not unreasonable. And
a CBDC meta pool.
Yeah, I was gonna say like we need a Curve governance proposal for like the government construction.
Well, if they need to have a proposal passed, I am bribable. So
yeah.
That's what the elephant in the room, like.
All right,
paying us, yeah.
I think we all agree that it's incredibly possible that they don't touch Curve. They just launch this on like a private Onyx thing and like send Mitch some fees. But let's also consider there's a outside chance they decide, why would we try and like rebuild this if the Curve V2 pools on Ethereum handle everything we need? And they decide it's just like, why not use the infrastructure that's already there? Like companies make build versus buy decisions all the time. And this would seem like a clear-cut case where if like the smart brains look at it, they're like, there's no downside for us to using it. Like we can still keep the coins KYC'd and permissioned and like mostly accessible to banks. So they would have like whatever like legal issues they need to resolve handled on that side of things in terms of like the exchanges that like could redeem the coins, and the infrastructure is just right there. They can launch their own V2 pool in seconds. So
yeah.
And it will also be tested by them, because they're testing Curve. They're not testing their own fork. So if they decide they want to fork it and do it something else, they're going to have to do another whole line of testing again. And who knows if it's going to work as well. So I think, on the contrary, it's going to be, if this experiment works in a few years' time, or maybe even less, it's much easier for them to decide, okay, let's start deploying real capital here because this specific infrastructure actually works and tested. And I think, it's not going to be easy for them to decide to do it elsewhere. It's not going to be an easy decision.
Yeah, we've seen so many examples of like people trying to fork Curve and not understanding the math, and it just like going horribly. So
I don't know if you're looking for like signal out of this. Not financial advice. Like I think all you can take is that like institutions are coming and volume is coming, and we don't know when that is. I think like it's really, really hard to say that like just because some institution ran one test means like anything for a specific protocol, but I do think it means something for like the industry as a whole.
Especially as it's a test in prod, and that's not
Yeah.
a cheap test. So if you are testing in prod, it at least shows commitment to the cause.
Yeah, for sure. And I wouldn't be surprised to see, like, even if we do end up seeing this marinara meatball sub on Curve, like they still do a test on Balancer just to check it out, you know, and they try to do the multi-pool construction on UniV3 because, like, honestly, it would be irresponsible not to.
And I think what's exciting about this, but not just Curve, like you say, Balancer and like every AMM and all of our bags, is that crypto is still small. Like the settlements industry is trillions of dollars. And that's the settlements industry alone. Imagine like all the other like massive industries. And meanwhile, like crypto's entire market cap is like what, 1 or 2 trillion. Like crypto as an entirety is small compared to like this massive ocean of liquidity that exists in the TradFi system. Once it starts leaking into DeFi, like we're talking about every protocol like growing monumentally, like potentially 1000x. Not financial advice, of course. So super bullish.
What you're trying to say is we're still early.
Yeah,
we're still early.
In my country, we call this copium.
Yeah. And yeah,
Right.
like it might also be the case that like TradFi like builds this on Onyx and like it like suffocates DeFi out of existence because all the activity happens there. Like who knows?
See, like I really believe, whether it's for the nose reasons of like, hey, the technology can fail, like centralized stuff is like less resilient, and therefore like people will opt into Ethereum, or if you go the my route, which is like these countries are realizing like we need neutral alternatives. Like I really believe that even if JP Morgan wants to create this like completely separate siloed thing, like the inevitable conclusion is ETH is like humanity's base layer for settlement. Like that's what we're building. It's owned in common. Like I can go on and on and on. I actually wrote a website about this. Like I just think that this is inevitable. And again, I have no problem with JP Morgan, with the CIA, with the SEC. Like as long as people are building, that is bullish, because eventually I think whatever is being built will settle to ETH and really will burn ETH.
Agree.
100%.
Knows, you're the guest of honor. Why don't you give us any kind of concluding or parting thoughts? Any like, any like big picture stuff? Any like ideas that you've been in the back of your mind that you'd like to kind of get out to the audience?
I must say you've basically like mentioned it all like throughout the course of this interview, of this panel discussion. So yeah, there's not a lot to add, I must say. So it's we maybe one thing is patience. So
Yep.
everything happens much faster, and there's like the saying that 1 month in DeFi is 6 months in real life, which is certainly true. Maybe even more true in bull markets where there are more active developers. But we know how slow-paced TradFi is, and that like until we see the first central bank digital currency available for retail clients, it will be probably in 2027, 2028. Before that, we might see solutions that are maybe available to banks only, but maybe will involve the use of mainnet. Or like, I don't know, there's also there were also articles about like zero knowledge solutions, because you would have to comply with banking secrecy laws and whatnot, and so it will all take time, and it might not happen in the next bull market, maybe not in the second cycle from now on, but maybe 6, 7, 8 years down the road it will mature. And yeah, this is maybe the last thing I would add: patience.
And here I'll add one more thing to hammer home your point. So yesterday, the week that the First Republic Bank went down, I was approved to move my assets over, and so it's been about a month and a half now, and I just met with them yesterday. And what I said to them is, hey, look, like I just need to be clear, like I have a lot of money in crypto, and I hope to make a lot more. Is that going to be a problem? And she was like, "Are you asking if Uncle Jamie thinks is going to kick you out?" And I was like, "Essentially, yeah." And she said, "That is absolutely not a problem. We don't have lists like that here. Like, if you like, and you know, whatever, this is sales stuff, but point is, like, it is so easy to experience like the news and these lawsuits as like the ends of times. And like, I hope that everyone is also watching like the enthusiasm that like the real adults have for what we're building at the same time. And you just got to keep your eyes open, and you got to know like what's noise and what's signal. And like, again, I have not been this bullish on like the technology that we're building since like before Do Kwon, before like my innocence was ripped out of me.
Institutions are coming. Nations are getting flippant. It is June 29th. This has been Leviathan News. Thank you, Knows. Thank you, Alunara. Please come back and chat with us anytime. Until the next tide.